Hello, hello. Welcome to another US Futures trading stream. Today is Tuesday, July 25th. It is 8:51 a.m. Okay, let's go. Let's talk, let's take a look at what the market is doing, what the market did, or where the market is at this moment in time. I'm going to take a quick look to the market time frames. Okay, where the market is standing at this one. Just let's take a look. Look at this range in the monthly time frame. We have a breakout of this 30-month range. One time frame higher for 3 months in a row. The weekly is doing something similar. You have a trend line here that you just can move down here, for example. This trend line, you just move it down here. It fits perfect here. It fits perfect here, and you can, like, trends do what works until it doesn't work anymore. Yeah? There is my buy around this level here. What's this level? 45.50. 45.50, which almost coincides with the base of this 3-day range here. But let's just not go. This is about trading, is about change, and what we do is you trade what the market is doing at this moment, not what the market is going to do tomorrow or next week. All right, now we have so far, the week is just opening. We have an inside bar here. This range, this 1, 2, 3, 4 week range has another breakout to the upside. We have here 3, 6, 8 week range breakout to the upside. 20 something week breakout to the upside, another breakout to the side, another breakout to the upside. Let's see if the market gives us a range and another breakout here, which is what everybody will be. No, everybody may be waiting or expecting now. That's the danger. When there is a consensus, there's agreement in something, just watch out. Just be very careful with what you do when everybody agrees on something. Remember when everybody was, has found consensus that there was going to be a recession, and what the market did afterwards. Now the daily, we can see another breakout in the daily. You have this 3-day range breakout to the outside. Now the market has come back inside this range and it's trading just above the high of this range at this moment. I have this line here, not for a trend. I mean, that's not the intention of this line here, but to highlight something here. You know what happened in the shortest time frame, in the intraday, happens in all time frames. I'll come back to this line here. Let's take a look at the intraday. Yesterday we were talking. I don't know if I posted something on Twitter yesterday about this. When the market was making these lows, there's some buying here yesterday. You can see that when the POC didn't move, didn't move much, moved a little bit higher. There's a white POC. This one looked like a short covering. The formation here. There's an initial reaction of the market. This is the opening, in which just shoot to the upside. The market open, shoot to the upside, and get out of previous range and just came back and close somewhere down here. As the market developed during the day, as the session, as the trading session developed, the market started giving us these lows here. At the time when these lows were made, this line here that is Halbach was down here. You know, the market was being bought from Halbach. There was nothing going on here coming from a day where the market was getting too long here. The same phenomena happened yesterday. Even it was clearer yesterday. Traders buying, market buying, don't let the market fall. There was something different yesterday. There was significant amount of buying in these levels. You can see these arrows here. Why I say that? Let's take a look here. These volumes here, you know. When I start to see this kind of buying, for example, in the market that's shooting to the upside, okay, when this is start to appear, there could be a sign that the rotation may start, especially when market gave us this kind of taper on the upper side. Nothing happened here, and there is a significant buying here. You know, look at this big volume here. Right? This is, I'm not going to check this, but this could be like maybe only one order here with this much of contracts, and another one happened here. And what I point when the notes that I take is what happened with the market when this kind of volume starts to appear. In this case, it was just bought. Market bounce from here, keep going higher over here, and keep going. At the time, for me, was, you know, this is like something is happening here. There's not letting the market fall, because there was some selling, but just big buying happening here. Okay, I'm not going to let this market fall, something like that, right? But what it is, nobody knows that. Okay, nobody knows that. I'm trying to identify what that is a full enterprise. It's just a waste of time. What I notice is what the market does after that. Okay, during the session and maybe the next day as well. The longer the market, the more time the market trades, the less relevant this kind of reference or levels become. Now, what I want to point out is what we were talking about these levels. Weak buying here. You know, there's significant. There is a stronger buying here. I don't know how can. Okay, I'm going to put it this way: the kind of buying that happened, yes, and this day, which was Friday, was super weak. Right? The same kind of buying happened here, but just a little bit stronger. There's some soft buy here, rather than more. It has more power, and you can see that when you check volume as well. Volume was significantly higher than the previous day. You can see how volume increased here, how volume is high. Now, the trade, I saw only one trade here yesterday. The potential of the market, you know, the trading towards and taking these lows here, you know, 1, 2, 3, 4, 5. This is what is called, what James calls as a firecracker effect potential here. And what is that? Is the market or traders just get too long here. They just keep buying at these mechanical levels. What makes mechanical? I'm going to buy at the low, at the very low of C. I'm going to buy a very low D, or as close as possible to D, or close as possible to G in this case. And the trade is taking this low. But notice, when this happened, market was way up here, And the opportunity comes when the trend actually ends. The market going to the upside, and this trend ends here. When the market takes this low, that's it. Okay, and you take chances and the stop is up somewhere up here or in this area. Something that also was a reason that this is a heavy area from 720, heavy volume area here. It was taken and it never came back. The stop could be somewhere in here, for example, as well. Okay, when the one got too high, it could be up here, because if this level is taking is traded back, the odds are there's a good odds the market is going to keep going. It's going, but the market just never did that. And once the market took this low, this is the trade. You know, taking or clearing or repairing, call it, you name it, these lows here. This one and this one over here. Very wide overnight, very wide POC here, very wide. Now, at the end, the market leave us very close with a weak low here. The same thing that happened here, same thing happened at the close. And now the trade, to go back to the bigger time frames, this kind of trade, this firecracker effect potential that we have here in the intraday is also what we have here. Remember, this is the daily time frame. Look at these lows here, so close to each other. This one, this one, this one. You know, taking these lows can move the market close to this low. Taking this low can close, and there's a lot of stops here. Lot of stops here. Lot of stops here. Lot of stops here, 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 here. It can trigger some selling here, just by taking the stops. That can be the trade in the daily time frame, in the next time frame. Now, if you add this line, okay, this trend line that we were carrying, or we were just moving outwards from here, for example, just move it to the next thing. This is having acceleration. You know, the higher the market goes, it's having acceleration here. But where do you have this acceleration? Way up here. Okay, and the trade can be, there could very well be some trading here, just taking these stops, and the market can bounce here or maybe being bought. And that's when this level becomes very important, the 4,500. Okay, because if there is something serious, the market will trade through this century number, which happens now to be resistance as well, because this has these multiple highs, close the gap here and trade towards the opposite side. If that doesn't happen, okay, because there is breakout here, if you do your market profile by hand, you will know that you can put all this together, and you will have a formation where we will have a market with two distributions here, one in the upper side, one in the lower side. Something like, let's see if I can find a market with two distributions here. Something like this, for example. Right? We'll have one distribution here on the lower side and another distribution here in the upper side. The one you have in the daily time frame is even wider. The upper side is very wide, has a lot of value in the upper side, and there's even more value in the lower side. It would be if I try to draw something, and this is when imagination comes to play. You have to use your imagination here as well. Okay, this would be something like this. Okay, let me take just 1 sec. I don't know why I do this. I could have done. I'm drawing this, okay? And the lower part will be something, could be something like this, even wider. Something that, this profile, you put all this together, you stack to some imaginary axis here, and you'll have this formation. Upper distribution here. If there is something, see, the same principle works also in all time frames. If there is something serious to the upside, if this is more than pain trade or something like that, these distributions, or the market will keep this distribution. Okay? Notice that this little tiny thing, this would be the equivalent, the single prints. That if there is something to the upside, this distribution, okay, the market will keep the distribution. If the market closes this distribution here, the market trade is back inside this range, okay, that could be the, okay, the next thing to monitor is if the market has acceleration and trades towards the opposite side of this distribution here. We have this distribution high here, distribution low here, distribution high here, distribution low here. Upper, lower distribution in the daily time frame. And notice we have a lot of events coming. We have earnings today. I think we have Microsoft and Google today. Tomorrow we have Beta and Meta, FOMC, GDP, PCE. Next week we have Amazon. What else? Let's take a look. What do we have next week? Just a second. I will tell you in just a moment. Okay, so you have Amazon next week. You have Apple. You have AMD, Shopify, Coinbase. What else could be relevant there? And what I use there, what do I use here is I use this website. You know, this Earnings Whisper. This is what I use here. And I got this here because I found this very useful, just to have earnings. Just because of that, okay. Just have a shortcut to see, and I check the earnings. They post earnings every Friday. So on Friday, you know what's coming next week. And if you want something else, you can also use this calendar. This is my earnings calendar. This Business Insider is totally free. You just put this one here. It's a Microsoft, Alphabet. Next week, if you want to go further, you just do it here, right? But if I have somebody that can do this for me yearly, it's not relevant. By the end of the week, it becomes relevant, right? I just can't do that. Okay. That's for the market. That's the recap, part of the recap, part of the homework that we got to do every single day. You want to do it, you don't want to do it, you have to do it. If you want to have some, if you want to have a chance or just increase your chances of success, this is something that we do every day, every single day. Every single day. Market made a high here, took the overnight high, took yesterday's high. Now, pay attention to this. This market is going to the downside. Was going to the downside yesterday, up to yesterday. We have a wide POC. We have a very prominent POC that wasn't revisited in the overnight. Non-excess here at the low. Questionable low down here. This low is questionable. Yesterday low, it is very questionable because it is overnight hardback. It was bought exactly from overnight hardback. Okay, that's why this low is questionable. This is a weak low. The traders, or the trading that was happening in here, all of these things have a base, have a very weak base. Have you noticed this? Okay. If you don't have market profile to see this kind, if you don't have window trader, something that you can do is this, right? This is what I also do or did. In my those charts here. Let me move this thing. It was way down. Okay, let's move this up here. I'll show you. This is, where's the other one? I should have another one here. Okay, it's not you. You. Come on, get out of there. All right, now I have it there. What else? Nothing else. 10 days, 30 minutes. All right, here they are. All right, boy, this is too big. Okay. I could just use, I use this purpose for the overnight. Okay. And I put the high here. This is just a Fibonacci. These are Fibs, right? What is this? Edit profile. No, I have 0, 50%, 100%. All the other ones, all the middle ones that are in between, I just clear those ones and leave the high, the low, and the center. And that's what this gives me. The high of the overnight session, the low of the overnight session, and the center. Okay, this hardback. Settle. Where is settle now? Settle today, this is very relevant, is 4583.50, and last is 4585. 4585.50. Okay. I knew I got something else here. Where are you? I put the other. Oh, it's up here in this side. Okay. Is this one? What I do with this one is the following. Okay. This belongs to yesterday. Okay. Yesterday's high. Yesterday's high. Yesterday's low. And hardback. How much is hardback here? It is 4584. 4584 at this hardback here. Let's make it this is slow, it's smaller. 4584, right? $45.84. That's hardback. That's my hardback. It's way up here now. What else do you have here that can be relevant? This is the moving averages. This is not relevant. That market is really far from the moving average. Now I'm going back to 30. And this is hardback. This is yesterday's hardback. I see. Yeah. I could just overlap to this here. I have it. This could be very relevant. Right. And I will another thing that I can do that could be relevant for if I don't have what I'm doing here is just doing something here that if I would not have market profile, previous day low, okay, questionable previous day low, Duplicate. I'm going to duplicate here and put this one higher. Here. Edit property. Previous day high. Right? Previous day high here. Just and all of these things. I'm not going to use these levels to trade, but to monitor the market. Okay, these are to monitor. And the next thing that my bad, this is not here. This is down here, and this hard back is, for example, this is. Notice where the overnight low is at this moment. This is hard back. The overnight low right at hard back, right? The mechanical type of trading keeps going on in this market. All of these, you can see this. Who would buy a hard back? This low is very questionable. You know, the overnight low is very questionable. This is exactly hard back. I don't need market profile. You can use your imagination and put all this together, and you will have a shape. You can do it by hand also. Okay? You can do it by hand. You can just draw your profiles here, you know? The same way. There's no excuse to not to do this. You can do it. If we don't have the means, for example, or we don't want to spend too much on market profile software. Especially, I consider Window Trader one of the best, if not the best. Charting platform out there. It has everything. Notice where hard back is, where this low is. You have this questionable low from yesterday. Value was moving higher. Okay. We have a break in the market. All the information, all the piece of information that we have just saw. You know, these distributions here, the upper distribution, lower distribution, range here, market coming back in a range, trading range here, upside trend in the weekly, in the monthly, in the bigger time frames. The monthly will be the last time frame that we see change. Okay, it will be the last one. All these pieces of information we have to carry, we have to keep in mind while we are trading or we are watching the market, you know, trade in the regular trading hours. All these pieces of information will become relevant at any given moment. You know, one at a time, all of them come together. The more in sync the market is, the more powerful the movement, whatever movement is doing at that moment in time. Whatever it is. Again, this is the second time. Okay, this is the first time the market opened at or very close to the center of the previous day range. Yesterday, was another day, 2 days in a row. And if this trade keeps happening, the market opens, we still have like 10 more minutes before the open. The market is going to open inside previous day range, and not just that, it's going to open at the center of the range. The odds of having chop here are the same that we have yesterday and that we have before yesterday. There could be some form of, you know, this is very questionable. Something can happen towards, you know, or aiming, then when the market aims to take this low, to repair this low, and whereas the market have downside continuation towards this low, which is super weak, right? Very questionable low here. We have held back here. That is the thing. And this overnight wasn't revisited. The overnight that we have yesterday, overnight POC, was exactly at previous day low. Okay, so there are some, I would say, now the bigger picture is this market has taken this range, with high volume, it's traded towards that high. We have excess here, we have excess here, we have excess here. But to my taste, this is kind of, I think these are just too close to each other. Now, overnight inventory was, I think overnight inventory is fairly rebalanced now. Good amount of the trading happening below seller, good amount of trading happening above seller, and now is, I think it's in the process of being rebalanced. How much? 170. There's nothing here. There's nothing here. It's not relevant, the overnight. There was some significant buying here around this level here, this heavy buying here, which was these thousands. This it's not. This is not coincidence, right? It's too much. Maybe the first time is coincidence, but it just happened over and over. I am monitoring this kind of what the market does around this kind of volume, and the market actually pay attention to what remembers these levels here, really high volume here. Really high volume, the market just pays. And that's where it is at this moment in time. Okay, now what I'm going to do here, I'm going to remove this from, for some reason I cannot use one of my displays. OBS just do not recognize this display. The display number 1, it doesn't recognize it. Just is dark there. My bad. Oh, look at this. Display 4, display 1. Huh. This is display 1. No, for some reason, yes. If I put this, I don't know what's going on here. But it's just I cannot. There's one screen here that I don't want display that I cannot see. Okay. 7 minutes before the opening. Market again is going to close. Right, it's going to open right at the opening. I'm going to post something here. Okay, let's see. What can I do here? How do I post something in Twitter? Okay, I want to take a screenshot. Basically what we have just talked. Notice where hardback is here, or was. Oh no, I'm not call this a very prominent POC. Very prominent POC here. Non-revisited overnight POC that coincides with low here. Kind of wide, and this is also questionable. Especially this one over here. Just check this one out. This level here from yesterday. This is hardback, and the market is opening. If it keeps trading here, it's going to open right at the center of this range. Let's save it. Drag to Oops. What's happening? Okay. What is happening? Well, second day, well, second, third day in level, right? Yeah. For third day in row, the market is supposed to open around the center of previous day trading range. Odds of chop and rotation are high. The scenario is the same again. But again, the scenario is the same. The scenario is but the context, look again the context, but again the context is completely different. Okay. Yesterday's low is questionable because it was overnight high back. Yesterday's questionable is because overnight high back, and this is questionable. Also, there is one intraday weak level that remains. There's one intraday weak level remaining. Overnight inventory is being rebalanced before the opening. Overnight inventory is the same conditions. Oops, open double pay here. This should be only 1p. Okay, whatever. Yesterday the market saw shooting to the upside right at the opening. Today could be quite the opposite. Okay, we can't see. We may see something to the downside. Whether that happened or not, no. Okay, 5 seconds to the open. Let's look it out. Let's take this one out of the way. Alright, look at where the market opened. Look at where the market is open, right at center. Right at center. What? My charts are taking too much time too. This happens when I have too much information. The overnight. This should move up here. Let's see if that happens. Uh-oh. Nothing is happening. Uh-oh. Let me open another window. Oh, right there. Right there. Finally. Okay. It's just too much. Sometimes it just takes too much. Look, we sit right in the center. Right in the center. When markets opens at the center, there is a lot. The odds of chop and rotation are very high. You know, from yesterday we have POC way up here. And shorting the market down here, especially when we have a wide POC, is very risky, okay? This is what is called shorting in the hole. You just short down here. This is, it's very risky, that's what I say, because the fairest price at which business is being conducted is way up here, and POC coincides with this high here. We have this spike from this day. This spike has been rejected so far. This is not good. You know, this downside spike that we have during this day, the market built value, has built value. First thing is it opened way up here with negates or rejects lower prices, at least in the very short time frame, and it started building value above this one. I decided to keep this base, this spike here, just as a reference, just to see what happens. Okay. Last, the market now, all indicators, all computers, all screens are red now at this moment in time. Okay, the market was to the upside, but all screens are red. All right. Okay. You know, now these highs, the high is questionable. Okay, the high is not good. It's right exactly at yesterday's POC. I'm still carrying the information from this day. When the market tried to go higher, every time the market tried to go higher, it was just pulled back. Trade higher, pull back, to higher, pull back, to higher, pull back. To what? To what at the end came out to be POC. Yesterday we have a wider POC. The action from yesterday, I consider this action from yesterday a continuation of this day. The market just trading to the upside, mechanical buying, very mechanical buying. This longs here, this long inventory had some liquidation, but I think the liquidation wasn't complete. There is still there's some weakness in this intraday here. The only weak level that I have on the lower side is this one here, and the very, very questionable low, but this is exactly the halfback. The odds of rotation chop are high. Okay, that changes when the market shoots okay, trades to either side, to the upside or to the downside in the first period, which is what happened yesterday. If you remember yesterday, the market opened up here and traded right away, shoot to the moon, took yesterday or took previous day high out, and everything changed. Everything changed when this happened, when that happened. Now, is that going to happen again today? That's the question. Okay, let's see. I have no intentions to do anything here at this moment because the odds, okay, the odds of having a rotational market, of having a lot of chop right now at the opening are high. Traders will also remember what happened, that the market went to the upside yesterday and then traded all the way down to the opposite side. Almost took it was very close to taking the opposite side. It didn't happen. It wasn't completed yesterday. And traders have memory. The traders remember that, and we also have to remember. We have to try to get in the mind of our competitors. Okay, we are competing here. This is a highly, highly, highly super competitive business. This market, this business is wild. Everybody's trying to take your money, and you are trying to take everybody else's money here as well. Having those things in mind, just carry the information. Okay? I was yesterday 8 hours all day in front of the computer. Got nothing. There was nothing. There was just one opportunity here, only one in the whole day. You have to. It is super boring. You know, this business is not glamorous as the movies make it look. You have to be observing, watching, taking notes all day long. Now the market is having a pullback here. Market took seller, market took last. It didn't trade. It doesn't have the strength that yesterday so far. Let's take a look at volume. Look at the volume here. Okay, this is one very first sign. Look how high yesterday was. Okay, look how high it was. Look how low today is. It's very low. You know, if I can use this, for example, we're going to use this. If this is an indication about the volume, whatever the volume we have here, this could be, you know, it could end maybe down here. Okay, remember the first, the big chunk of the volume in the first period happens in the first 15 minutes. Let's see what happened. Tomorrow we have FOMC. That's something really relevant. Today we have earnings, important earnings as well. What happened in the last time the market has these earnings? What happened when Tesla, Netflix reported? We have a big break. That is still in the mind of traders. Okay, the market, these companies are going to have good earnings and the market is going to break. It's going to show. If there is good earnings, which is highly likely, right? This market is just going to break. That is what will happen. That's in the mind. Okay, you can see that in the mind. There is some trades. There's some volume here, accumulation of volume here from yesterday. Question below says another volume here. There's more volume here than it is up here. That's from yesterday. What else do we have in the upper side? Another big volumes here, and also the 4600 is not that far. It's only 15 points. 15 points above this high. Traders can see that. Okay, well, you are so close to the 4600. Let's go. We can almost touch the 4500. I can almost touch. It's so close. It's so close. I got my calls at 4600. Just a little bit more before I close. And in the meantime, you know, time is killing the value of your calls, because we tend to trade numbers and we forgot about the context. Just adding context, that's what discretionary trading is. And we just gather a lot of information. And market profiles is just that. It's just another way. It's a way to organize data. That's what market profile is. It's a scientific way to organize data. Scientists use distribution charts to accumulate, to organize data. Do you remember what happened yesterday at the opening and what is happening right now? If you were at the opening yesterday, market opened very close to the center. My bad. No, it was here. Market opened kind of close to the. No, what is the center here? Well, really close to the center. Not that close, but around the center. Inside yesterday's. No. There is something here. There is something wrong here. What happened here? I guess I am missing one day. Yes, I am missing. Yeah, this is market opened really close to the center and shoot to the upside. Market is open close to the center. The upside movement doesn't have the same strength that it was yesterday. So that's the first thing that has changed. It's different. The tempo, the speed, the confidence the market has is not the same. And remember, tomorrow's FOMC. If there's any adjustments that's going to be down to hedge portfolios, to whatever, it's usually made, these big companies, big money, these hedge funds, don't wait until the previous day. The adjustments are usually made up to 2 days before. By now, they are all hedged, everything is protected now. "42 minutes, almost half of what is projected, the volume. And remember, this is the chunk. The biggest part of the first period, the biggest part of the volume comes on the first 15 minutes. So maybe this even could be even lower. Maybe down there. Let's see. What I'm not seeing here is today's. Okay, remember this, because this is going to go away. Just remember that. Oh, for all purposes, I'm going to add another one here. Oops, what the heck? Today and yesterday. No, I cannot see today here. This is today. I mean, this is yesterday's now. Okay, today is going to start at 6 p.m. That's why you see only one. But remember what we had here yesterday. Okay, this is something very important. It could be very relevant. That's why homework is very important. Okay, that's why you have to do your homework and take notes here, so you can, if there is something that you can just come back and check. The hardest part of this business is also remembering all these pieces of information, because once we start doing our homework, if you are not doing it and you are just starting to do it, what will happen is, you got this piece of information, but when the market opens, it's going to fly out of the window. You won't remember now. I bet you forgot about this low, where this low was bought, what happened here as well. Okay, those are things that we have to deal with all the time. The way how this market, you don't see the. Now we have an extension here, very low. Oh, look at this, 8,000 here. The market traders are trying to do what they can see. The way you have this congestion here now. And remember, what this congestion is, 85, okay? 85. That's one big buying as well, 85. Okay, that congestion yesterday. Oh, I can show it here. Happened way up here. This is what you have this one, and now the difference here. This was above yesterday's high. Today's is still above this day's high, but it's inside. But the difference today is that we have this day in between. It's happening again. I don't. I'm not trying to say nothing here. That's just one piece of information. You know, you start gathering information. You know, the odds of having a choppy market are high. Something that happens quite often as well is when markets have a really low volume. You know, if there is any kind of significant buying, you know, sudden buying or selling, the market can move long distances really fast. And the reason being that there's no volume. There's no volume. That's why bigger, that's the reason why bigger money does not trade the overnight. Because if you want to enter, you want to fill a position in the overnight, because the volume is very low, you can just generate some sharp, upside movements or downside movements. What you want to do is you want to have position and want to have, really tight spread. If you start feeling at 48, 87, as now, you want to end filling your position at 48, 45, 87.50, for example, right? If you have your position filled at 45, 94, but that's not good. That's not good. It doesn't make a difference if I have 2, 3, or 4 contracts, but if you have thousands, that's a lot. That's a completely different story. This day just different. Look at this chart. Well, I guess I do have, and that's why I take this. Look at this. There is nice momentum at the opening. Ooh, triggers. Those are the blues. It stops a little bit, back and forth in this area. Yeah, you have a lot of. You have some buying, some little blocks here, and the fill sign appears up here. This thing here is happening right now, at this moment. It's down here. Okay? As in the same way as yesterday, the market lacks volume. I didn't see any 10Ks throughout the day, just big blocks. No high volume here. Okay? When I got high volume is when I do this areas, I highlight the area. Okay? That just to remember that those areas there were heavy volume traded areas. 48 minutes. With 50, this is 2/3 into the session. The market could maybe end a little bit higher, maybe here, half here, kind of, maybe even the same as yesterday. Let's see. If it is the same as yesterday, that would be something as well, because yesterday the opening was quite a strong opening, quite a volume. Yesterday there was some buying. Did you see the difference? Can you see the difference yesterday as today? We have a strong buying yesterday. It just shoot to the upside because there was a lot of selling that was present. I would say the small traders selling because of what they have in the previous days. We have everybody saw the market breaking here, so it was easy to fill buying orders here just to that overrun those ones. Now today can be quite the opposite. Okay? Traders saw there's a change. The market now is going to the upside. Okay? So I can sell now. I can start selling. Just try to think, and those are different time frames. I'm not trying to guess what's happening, right? Because that's impossible. Nobody knows what's going. If somebody knew what's happening, okay, that would be really good for them, right? And it's very unlikely somebody knows what's happening, because the participants are the components of the market is we as traders cannot know what anybody else is doing. We may know, for example, sometimes this bigger money trades in different way. Okay, there's so many ways to fill positions. You have these dark pools as well, and nobody knows what's going on in there. What you want to do is disguise your position, because if somebody knows what you're doing, guess the first thing is going to happen. The first thing that's going to happen is, they're going to upfront them. That's what they're going to do. If you know, for example, and this is the last thing I remember. I am not an insider, but Jim mentioned this. But because he has this institutional customers as well, professional traders. There was this big order, maybe like 20,000 puts that were bought. Somebody just bought some puts that were hedging some portfolio, I believe. And what market makers do when they have these big orders, they need to hedge those positions as well. And how do you hedge? How do you hedge puts? Your puts, that you're selling puts, because you're selling puts, you're shorting the market. If you're selling puts to somebody, some institution, you need to hedge that, because that can break you, can get you broke, can block you. How do you sell those puts? They sell futures. So you can expect that's when you can expect some downside movement until the market feels, until this market makers are hedged as well. And once those positions are filled, that's over. The market might be at one specific moment, one specific period. It can be anything can trigger something. Any kind of sharp movement can trigger a high sell-off, or crazy rally. And momentum just can join and accelerate the downside or the upside movement. We never know. We never know that. We never know what's going to happen. But those pieces of information, we don't have access to those things. And institutional traders cannot trade personal accounts as well. Most of these institutions don't allow their guys to trade, to have personal accounts. They can get fired. You don't want to risk your high paid job for some short-term gain, right? But there's anything can happen. There's a lot of games that are played in the market. Notice now how the market has stalled. Has just stalled, right? Has just stalled. There is a time to buy this market. You have this congestion. This is the first thing, really dark reds here. So this is why I call red, dark red. This is light. They start to dominate the area. There's a lot of congestion here, more congestion up here. I'm not saying what is going to happen. Okay, I'm just observing. At this moment, I'm just observing the market. The odds, chop and rotation were high from the opening. Look where the market is now. Look at the volume. Okay, it's just dry here. When the market cannot take this, cannot trade, cannot take those, it just dries. Trade is noticed. Okay, the market doesn't have the same strength as yesterday. I better just close my position, or I don't enter, I remove, I hedge, I do whatever. I have to do something here. It's just rotation, a lot of rotation here, a lot of chop. The market is not having chop, right? It's just open here, start going, grinding its way up. If we have a market like yesterday, it's this opening, to the upside, keeps going. Notice that what happened yesterday, right? This sharp break after the market took this high. This might be try to up from that now. I'm going to say this happened yesterday and now today is going to happen again. No, but they don't have context. When you do that, just trading. You are trading your RSI, your moving averages, your 20s, what's happening here, you are buying at the low of the 20, the MACD up top, or whatever, or the Scholastic, all those indicators there. Those indicators, we need to understand how those indicators are built. There's a formula, right? There's a formula to build those indicators. There's a program there that calculates those indicators, those numbers, those reference, those trending lines, or whatever. It's a formula. E plus B to the power of 2 divided by X plus sigma or plus this constant, whatever. That's a formula, and boom, you got your indicator right there. And if you use a formula, you are assuming that the market is predictable. A markets are anything but predictable. Did you see this sharp movement? What happened here? It's 9, we have F, almost 10. Oh, consumer confidence at 10 a.m. 10, Consumer confidence at 10 a.m. Oh, look at that. That's last push to the upside. When the market has low volume, bigger traders can just do that. Now this high is very questionable. This is not a good high. Things are changing. The break that happened yesterday, once the market took this high, trade to the upside and then had a pullback, today is completely different. Now we have strength in this movement. We have this side, this is super weak now because it has no excess. And also this high is very close. It's not that far. It's a couple handles and the 46 handles right away. And there's a lot of volume here from 720, which is this day. There's a lot of volume here. Okay. What happened this day? We have a break. There's a lot of volume here in this area. If the market can't take this area out, they're going to start covering. These shorts are going to be forced to cover, and that can trigger also a movement to the upside. The market hasn't taken the high up. And remember this, something very relevant is what sometimes what doesn't happen is also as important as what happens. Market has a chance now in this first period to take that high out. You just don't do it. Now, take a look at this. Take a look at this. This is a different view. Do you see the action? What's happening here now, right? What's happening? Selling. The market is going to come all the way down to here. We got 1, 2, 3 highs here. 1, 2, 3, 4 lows here. One before another one. 4, 5, 6, 7, 8. The low side is super questionable. Very risky here. Okay, I won't let any, if I am long, I won't let the market trade be very tight in this time frame. The risk is very high. It's still inside day and nothing has changed in the monthly. Okay, now look at that. Consumer confidence, okay? We got that number now. Consumer confidence, 10 a.m. You see the sharp movement. Boom, open here and boom. Don't look at the number, okay? I don't care about the number here. Just don't look it. I know you can see here a number. You can see here a number. Don't look at the number. Just know when this is happening. You know, when this is happening. Consumer confidence, 10 a.m. Okay. I didn't see the number here. I don't care about the number. And you can see that there's some position here. And I can see some, because I forgot about that we had consumer confidence until a year. But this movement, oh, okay, what's happening here? So that's when you start to check, check check the pieces, because there is so much that you need to remember, that you need to be aware of. Also, something else that I use is, let me take this one out. I didn't do it today, but and I have CNBC, MSNBC here. Just mute it, and just to see what sometimes, there's some news that what the street is breaking news, for example. Breaking news. What's happening? Breaking news. Breaking news, right? Breaking news. It's just be aware of these things, because everybody's watching this. I have that on the side. On the side, I'll show you what I have on the side. One of my screens is, and most of the time, I try to not have this because it's very distracting. Can be very distracting, and they're not worth see to have it on all the time. This is what I have on one of my screens. This is what I have on one of my screens. Okay? The other one, okay. Sometimes I move this, and this actually what I do have is almost all the times is rather this way. Oh, wait, that was not it. Just let me do it again. Oops. Oh my god, what the heck happened? What the heck I did? Something like this, okay. More often and not, it looks like this actually, with this three thing. No, this news here. Usually I have this link to my computer, so when did you see what happened here when I have these notifications here? It just pops up, see, not all of them, but it's relevant to me. Which happens to be this now news scheduled news releases, right? These numbers, and you just go to their website and you can schedule that. You can, and so they are put here on your notifications here. You have notifications here. What was the number? Forecast 112, previews 19. Ooh, consumer confidence is super high. What the market did, but has a kind of like a break here, right? Now, let's go back to the market. Okay, from yesterday, we have a questionable low, super questionable low, non-revisited overnight POC, a non-excess on the lower side, and now this side is weak, this side is weak here on the upper side. And tomorrow, FOMC, today, earnings, Microsoft and Google. Okay, we may have some. Okay, the day it is very early in the session yet, but again, there could be some odds now here. The market could be setting for a sequential trade. What is a sequential trade? Is a market taking one mechanical reference, one weak reference, which in this case is are these ones, right? This one and this one. If there's two in the upper, in the lower side, we'll have another ones in the upper side as well, very close to 4600. And the market takes one side, trades towards one side, and then the trade actually is the opposite side, okay, which because it's weak. Because we cannot know what is going to happen. So what are the odds that the market is going to fix one and then trade it to the opposite side? This high is no good, this low is no good, this low is no good. This low is right, it is overnight low. This high is yesterday's high. Very choppy market, 50% chances that something is going to happen here. 50% chances that it's going to the upside, 50% chances, 50% odds the market is going to trade to the downside. I don't like those odds. What do I do? Hey Gianluca, what's up, man? I'm sorry, I just saw your text. Not even the news gives trend movement anymore. It was at 16. What was at 16? What was it was at 16? Consumer confidence? I don't know. Can you tell me what was what you are referring to here? No. I don't. Okay. So far, the odds of chop. I mean, the market advertised chop and rotation when it opened. The closer the market opens to the center of the previous day range, the higher the odds chop and rotation. The same scenario where we have 3 days, back-to-back days that open, that have the same kind of opening, pretty much the same kind of opening. But the scenario, the circumstances, at the end, everything we know is a series of facts surrounded by different circumstances. And context is everything. Context is everything. What happened here, we have the same scenario that we have here and we have here. Or I could have said that in the opposite way, right? The same scenario we have here at the opening, the same scenario we have here, the same scenario we have here. But the circumstances are completely different here. The circumstances are just different. That's just another thing. There's a world of difference here. I think that now look at this low. Come on. Look at this low. You look at the references here. Right? I'm going to use some gray lines here. This is overnight PSC. I'm going to use I'm going to put some point. Okay, this is overnight PSC. I mean overnight low. Who buys? That's the thing. Who buys exactly at overnight low? And one reference. I give you one reference. I give you a POC here. Who buys there? Ask yourself that question. Who buys here? Next thing, who buys exactly at this reference? To the tick. Okay, these references are not. I don't use discretionary trading. Doesn't use this reference to buy or to sell. These references are here to monitor the market, what is doing in the market. Because if there's an upside movement, for example, that we have, there are good odds the market is going to take this high, for example, right? The same odds that we have out here is the same odds we have down here. But who is going? If we have an upside movement today, coming from this level, coming from this level here, coming from this level, we can kind of infer who is doing the buying here. And if this movement, this upside movement, is conducted by people like us, like you and me, what is the difference? What is the staying power of people like you and me relative or versus, for example, hedge funds? Hedge funds doing the buying, or bigger time frame money doing the buying. Who do you think has more staying power? That's where the expression of weak hands comes from. But retail has to just make a mess. Or you just give weak hands another meaning. Strong hands, right? I was on that whole don't say weak hands, right? Monkey hands, I don't know what they call, right? Apes don't say stuff like that. It's just that can be catastrophic, right? When we don't just put things in context. When you put things in context is when the market did start to make sense. Right? We just start to see that we start to realize, for example, that there is nothing going on here. There's nothing going on. The market hasn't shown its hand yet. The market is doing nothing. The market hasn't given me any opportunity yet to do something. If I do something here, either to the upside or to the downside, my odds are just around 50%. We have something yesterday up here when the market took this low out. Another thing, this day also was a good day. It was a readable day here because we could identify early in the session that the odds that this is a rotational market. This day was a rotational market were really high, and you can start selling at the highs and buying this whatever you. But which side you are in here? If the market is going to the downside, the trade is sell the rallies and take profits on the breaks. That's what professional traders do in the market that's trading to the downside. You look, right, quote unquote look, because you don't have to look. A trade needs to come to you. If you are looking for something, if you are looking for a trade, you will find a trade. You will find a trade, and more often than not, more likely it's going to be a wrong one. You just have to wait. This wasn't a rotational day, but the odds that we are going to have some rotation yesterday were high as well. Everything changed when the market took this high yesterday. Everything changed when the market took this high in the first period. That's when you start looking to the upside. And it could, that part of the market, labeling what kind of market we have yesterday could have been made early in the session, in the first period. Okay, this is not a downside market now, and that description of the market, the odds that this is not a downside day were high. Just because this period here, just because of this one taking previously high out, just because of that, and that starting from that description, when you start to label what kind of market we have, we can. I mean, I don't want to say this, but I don't like to say it this way, but we start having a bias, right? But what we try to do is start to have a read of the market. Now, market doesn't have good high here, neither a good low. The market couldn't take this. Was very easy to take this high out in the first period, because there's a lot of stops here and there's a lot of stops here. The market just didn't do it. Half 15, just half, a little bit higher here. I am monitoring this area, what the market does with it. I don't see anything here really. All right, it is 10:15. Unless you have any questions or comments, I guess I'm going to call it a day. I call the morning stream for today, and wish you guys a good rest of the day. Stay safe. Out there. Before I go, our question, any kind of movement here. Just be aware. If this market takes or breaks to the upside, we can have a trending day, because there's a huge volume here, very white on a PC. If problems happen, the next thing to monitor once the market takes this high out is the 4600. The market can, if the market takes this high out, good also market trades towards this area, because you have your POC here, halfback here, and 4600, and another chunk, big volume here, big volume area here, big volume area here as well. Now this area has been traded a couple times. This is from 720, which is this day, has been traded through yesterday, has been traded through today as well. Something that happens often is the next time the market does this, may have a break, it comes back, and this time it doesn't get even closer to this high. It's sold from somewhere down here, for example. Right? But notice that from yesterday we have these high volumes here, really high volume blocks here as well. It started at 75. This is, you can see the action here. 75. The next time 80. Next time 85. Where's 85? No, not 85. Where's the next one? 90. Okay. This is the pattern. This is a pattern here. You have here somebody's buying here on this level. So they may very well have covered up here because the market did not have upside extension after this big volume happened here. The bigger one was this one. Okay. All right. Now it is 10:20. I wish you guys a good rest of the day. If there's something going on, or if there is nothing going on, that will be more likely. I will have a more market update at 12:30. Otherwise, I'll see you tomorrow. See you guys. Have a good rest of the day. Have a good trading day. Bye bye.